A very good morning to all our viewers. You have tuned in to Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is a show where you get all your stock-related queries answered by the experts. So do get ready for that. But before coming to that, let's have a look at what the markets are up to. So Cheryl, the weekend was full of the analysis regarding the SVB and the crisis regarding that, and the sentiments for building that we could actually repeat Friday's move. But so many news flows and the Indian markets are seen to be reacting exactly as per that.
Absolutely, Shrishti, more than analyzing, it was more of constant news flows with regards to SVB, you know. The entire weekend was spent by that, not only entire weekend, this morning as well, but a positive news flow coming in on that particular fact, the fact that the the United States have actually intervened in order to curb or cushion the impact of the SVB collapse, and that's the reason why you saw US markets or US futures rally in the morning. You saw Asian markets also recover some lost ground. SGX Nifty also right from down about 100 points or so. It indicated that we will be opening in the positive territory, and that's the way how we play through the script. We did have an open in the positive territory. Now we have drifted in lower. We are actually nudging towards the negative territory when it comes to the benchmark indices. You have Nifty buying that's already slipped into the negative territory. A lot of individual names that are standing out in today's trading session, and one of the stock that's soaring in trade, a star performer in today's trading session has to be Tech Mahindra. Followed by Tech Mahindra, you have Adani Enterprises that's trading higher by about 1.5%, ICICI Bank up 1% on the Nifty. But on the flip side, you have IndusInd Bank, that is the top loser on the Nifty today. 6.5% downtick coming in for IndusInd Bank. Remember that the MD and CEO has got an extension by the RBI, but for a period of 2 years instead of 3 years that they had requested. So IndusInd Bank is actually declining in trade today. Infosys, on the other hand, is seeing 1.5% downtick in trade today. And why is that? Because the top brass of Infosys has quit and now has gone ahead to become the head at Tech Mahindra, and that's the reason why Tech Mahindra is soaring in trade today. You have M&M that's down about 1.3%, Tata Motors down 1%, as well as Adani Ports that's down about 1% or so in today's trading session. Let's look at the sectoral indices and what's the picture looking like over there. You have the energy index once again holding on to gains of about 0.5%, metal also holding on to some sort of gains. You have PSU Bank index that's marginally in the positive territory. But on the flip side is the broader markets that is actually underperforming sharply. You have small cap index that's down about 1%, mid cap index down about 0.8% as we speak. Pharma index also under pressure in today's trading session. Shrishti, so like you mentioned, yes, we are all eyes is what is happening in the global front when it comes to SVB and its impact.
Well, yes, absolutely. But the big question that is lying ahead, what is the likely impact in the Indian markets? So on to the Buy Now, Sell Now lens, we tried to decode that. And we are being joined by Sharad Dubey, our researcher, with all the analysis. Take it away, Sharad.
Well, yes, almost 20 companies are there in which SVB is actually invested in India, and of course in the weekend there was an important development coming in where Vijay Shekhar Sharma had stated that SVB is neither an investor, neither a current shareholder in Paytm. Now, of course, without Paytm also we see the investments coming in, that's coming to the tune of almost $1.1 billion. So there are certain startups also having tie-ups over here such as ChargeBee, Postman, CleverTap, where there is a financing or the banking relation is there with SVB as well. And apart from that also Nazara Tech yesterday explained that almost $7.75 million of exposure is there amongst its two entities. Apart from that also Y Combinator-led startups, especially from India, most of them have financing agreements with SVB. Now let's look at the numbers, how they actually pan out of the investments made by SVB in India. Next, Paytm, there are big names such as InMobi, Bharat Financial Inclusion, Naptol, and all these important startups which are there, which are having the tune of more than $100 million exposure as SVB is investing in India. Now you can see these numbers coming in your screen. Apart from that, also Bluestone and Tutor Vista make it to the list. Now this data has been coming from the latest updated data coming from Traxon. Now also Axel, that itself is a VC firm that is also having almost 35 companies are having a tie-up with SVB on this, and that is something to watch out for. Apart from that, the question remains is what lies ahead for the Indian startups, and that's the important thing. This includes no new recent round of funding has actually happened by SVB. and the fundings which have happened were on low ticket sizes. Apart from this, the most SaaS companies in India which are having large exposure in US, they do have credit lines with SVP, and sentimentally there might be an impact as over the weekend the US VCs asked the founders to withdraw or limit their exposure to SVB. But what are the ecosystem members stating about it, and especially in the theme of India itself? Let me explain you that VCs are saying that there is enough dry powder in the system in the Indian accounts as of now. Apart from that, the government also will start meeting startups this week to discuss the impact of the SVB crisis, and Fed also actually stated today earlier in the morning that they'll be making available the additional funding for the startups. And lastly, even the UK's PM also stated that there won't be any contagion risk.
Thank you so much for that, for in-depth analysis on what would likely be the impact of the SVB collapse on India and Indian companies that are associated with that particular bank. Thank you so much for that, Sharad. But let's talk about the stock of the day, and that definitely is Tech Mahindra. The board has appointed Mohit Joshi as the MD and CEO for a period of 5 years. We try to decode what does this mean for Tech Mahindra as well as Infosys, because remember, Mohit Joshi has quit Infosys to join Tech Mahindra. So here's Nikunj Dalmia, who is the managing editor of ET Now and ET Now Swadesh, and decoding what this means for Tech Mahindra going ahead as well as the IT sector as a whole.
Tech Mahindra has been in talks, so to speak. Why? Because everybody knew that Mr. Gurnani is retiring, and markets were anticipating that a heavyweight from the industry is going to be now, who could be the CEO of Tech Mahindra going forward. So I think markets will be excited with Mr. Joshi's appointment as the new CEO and managing director of Tech Mahindra for 5 years. Tech Mahindra has two basic challenges if I compare them with industry average. The BFSI vertical traditionally has not fired full cylinders, and their numbers in the BFSI vertical are way lower than what the industry average is, despite being a tech company or despite being a tech stroke or Mahindra company. The margins are at the lowest end of the barrel. If you compare the margins, it's nowhere close even to HCL Tech. So there are two options here. Can Mr. Joshi come and reboot the entire Tech Mahindra culture, business cycle? And if he's able to do that, given the brand name they have, given the positioning they have, could Tech Mahindra be the big turnaround story of 2023 and 2024 and beyond that? The past experience has revealed that there have been success stories and there have been failure stories. If one looks at the Vishal Sikka migration for Infosys, it did not work in the first draw, but Salil Parekh, as the CEO of Infosys, has worked like a charm. Similarly, the change of guard at Wipro, initially it worked for Wipro, but the change of guard now is not having a clear impact in terms of the positioning. But the clear success story is what happened to LTTIS and LTTS, where the change of guard has really changed the way how business does. So the man who runs the business matters in this kind of a business, because A, there is understanding, and B, you bring a lot of relationships on the table. Always this classic example to everybody. When Mr. Ramadurai was running TCS and then Chandra took over, the business of TCS completely transformed. Can Mohit do that to Tech Mahindra? There is a strong case for it, and there is a need for it. And now with him coming over, expectation is going to be very high for Tech Mahindra as a stock.
All right, so that's the take coming in from the managing editor of ET Now and ET Now Swadesh, Nikunj Dalmia, on Tech Mahindra as well as the IT companies as a whole. But let's ask our experts what's their view on Tech Mahindra, as well as where do they see that impact of SVB on the Indian markets as a whole. But first, let me bring on board our guests for today. We have Kunal, Bothra as well as Ashish Kapoor joining us on the show. A very good morning to both of you, Kunal as well as Ashish. Brand new week coming in, and over the weekend, the news flows and that we were prepared for was definitely the fact that Indian markets would be way down in the negative territory, given the fact what happened on Friday as well, and we were expecting that collateral damage to come in as well this morning. But you had the Federal Reserve actually step in, and Federal Reserve, US Treasury as well, step in actually to cushion the impact of SVB collapse. Kunal, let me come first to you. How did you view this this entire particular scenario on the charts? Where is Nifty headed from here on? And post that, I'll ask you your view on Tech Mahindra.
So, good morning, Cheryl. Good morning, everyone. So, the reaction for our markets compared to the handover, the news flow on last week, Friday, specifically the market reaction on Friday, the movements of Nifty and Bank Nifty, I think today's reaction is a very mature kind of a action from our markets. It also indicates that our markets are ready to absorb major kind of volatility. Of course, the news flow has come out to be not negative, at least at the end of the day. So, that would probably have more positive ramifications for many global markets. But the way this volatility has immediately subsided, I think that's a standout feature for our markets net. In terms of technical parlance, 17,200 remains to be a major support. We flagged off on Friday as well that only a bearish stance could happen only below that 17,200 mark, or a confirmation of a break below those levels. So would maintain that stance on the index yet again.
Okay, so that's the take coming in on the technical check for Nifty. But Ashish, coming to you, how do you see all the global news flow, and where does Indian markets are headed as per your view? Because there are views that coming in that going ahead there could be more pain, and maybe SVB is the first of instance that we are seeing in the global markets. There could be more. So how are you viewing this whole scenario?
Well, I think two, three things here. One is that, firstly, yes, the action has been very prompt and very correct by the US authorities to kind of, ring fence the damage out of SVB Bank, and assuring the depositors that their money is safe is a very good positive step that will kind of ease the nerves everywhere. So for the immediate, I think the SVB thing is kind of factored in, discounted. So I don't see much more happening now. I think within a few maybe days it will become more like an academic discussion. So that part is kind of, I think, taken care of. But like you rightly said, I think there could be more such skeletons tumbling out, because we have had a very steep tightening in the US. The last 1 year has seen several rate hikes and a complete tightening of the whole financial system in US. Usually, when tightening happens, there are accidents which happen. So this is possibly the first of, hopefully not, but I think could be of several more accidents which will be encountering going forward. So yes, the markets could remain choppy. The good thing is that, yes, the major impact is normally on the first accident. So I think the major impact is already there in the price. There could be some more minor hiccups, hopefully, going forward. But the major one, I think we have already encountered. One is that. Second is, when it comes to really markets, now you see last 2 years was a dream run, or almost 2.5 years was a dream run. But markets somewhere have to kind of, stabilize and kind of rationalize, and also on an average kind of, return which the markets are supposed to give. So I think going forward, the markets are likely to remain range bound only. The good thing about India is that domestic liquidity is very strong, and domestic market and economy is still doing well. There is plenty of liquidity here. Markets are doing well, and otherwise also I think various industries and generally the economy is not at all in a bad shape. So we will continue to remain outperformers. But going forward, I think the best approach would be stock specific, because markets as a whole, but it's going to outperform, but it's not going to really go up in a hurry.
Absolutely.
So, like, my best case scenario is a range bound market with stock specific action.
Right.
So that is where one should focus on.
That's what one should focus on. Range bound market need to be stock specific. But talking about stocks, Kunal, I'm coming back to you to take the view on Tech Mahindra. You have been bullish. You did flag off also Tech Mahindra price volume breakout when we did Pathshala. But that was as just an example sort of chart that you have shown us for Tech Mahindra. But Tech Mahindra today is breaking out, and how?
Absolutely, Shel. That's the power of patience for investors who spotting those classical price volume breakouts on charts, and that's how it is. Because when the stock gets into a breakout mode, and when it's visible for everyone, the stocks, they go into a natural phase of consolidation or a mean reversion. But then till the time the starting point of that breakout doesn't get retraced, that's the confirmation that the price volume breakout still remains intact. As you can see on the charts, over the last 7-8 months, the stock has been showing a very classical kind of a pattern, rising bottoms for Tech Mahindra, similar breakout zones for the stock. Now, about this 1150 mark, I believe doors open up for Tech Mahindra for more than 10 to 15% upside further for the stock. So I wouldn't be surprised that possibly in the next 3 to 6 months, the stock rises up by at least another 15%, if not more.
You expect the stock to rise by another 15%. We will be coming back to ask queries on stock specific, but I already have Indu's query on Tech Mahindra. What level should she add more for the medium term? So let me get this query out of the way, given his Tech Mahindra.
So I think at current levels you can start buying the stock. I don't expect the stock to retrace back or come back towards that 1050 mark, which it hit on Friday. So I think it's a good level where you can start bargaining or getting a good bargain for Tech Mahindra. In case if there is another 10-20 point dip for the stock, which could be a natural dip for the stock after this kind of a news flow, take that as yet another zone to buy as well as accumulate.
Okay, so that's the take coming in on Tech Mahindra, with many more stock related queries right up after a short break that we are slipping into, but don't go anywhere. We'll be right back. Welcome back to Buy Now, Sell Now on ET Now, and let's kickstart taking all your stock-related queries. Viewers, we are live on Twitter as well as Facebook, and you can also connect with us on our WhatsApp number flashing right on your screen. But let's kickstart, and the first question that I have is coming from Gopal Rao, and Ashish, I'll take it up from you. He has bought 300 shares of Kirloskar Oil Engines at a price of 390 rupees. He's a short-term trader and wants to hold this counter for the next 1 to 2 months. Your view?
But I think 1 to 2 months, very difficult to do any fundamental call on it. I think best is for Kunal to answer on a very short-term chart basis what does Kirloskar look like.
Recently, this particular counter wasn't focused on the back of promoter selling. That's why I asked this question to you. But Kunal, anything on the charts that you are spotting?
Yeah, I think it's a stock which has recently sprung up in very good volumes. Last couple of days post the news flow, the stock has gone into a mild correction, I would say. So, typically for such kind of stocks, we ideally wait out for a point where 50% of the recent rally holds up. So, I think that level comes maybe closer to 340, 345 for Kirloskar oil. So, I think if the stock holds on to the 340 levels, traders could still look at a buy as well as maintain the bullish stance.
Okay, this one is coming in from Sri Kutan. He's holding Jyoti Labs at the price of 200 rupees per share. His view was for medium to long term, but now he wants to know whether he should book loss or average it out or shift to stocks like M&M or HDFC Limited for the matter of fact. Kunal, since he is asking for what he should do right now with his stock, I'll take this up with you.
So I think you should hold on to the stock itself. I don't so Jyoti Labs has been a stock which has done reasonably well. It's a low to moderate beta kind of a stock. The trends of the stock have been stable so far. I think if I'm not wrong, the stock is still holding up above the 200-day moving average. The 200 DMA is at 186, 88 levels for the stock as of now. So it's been floating above the long-term averages. Even the last, I think, 6-8 months, the stock has not convincingly broken below the 200 DMA, and that too at a point where most of the other mid-cap names have managed to break below the long-term averages. So that's a sign of strength for Jyoti Labs, and I think you should probably hold on to these kind of names.
Okay, moving on, and Ashish, Yoga Rani from Saudi Arabia has invested into GHCL. She's holding 300 shares at a price of 695. Currently at a loss. Wants to know, is this a good time to average out this counter, and what's the outlook ahead?
But I think the chemicals as a whole, the stocks have really taken a dip because of the price fluctuations. My own sense is that all these things will settle down, and eventually the chemical business, it has a great future going ahead, especially from the Indian manufacturing point of view. And GHCL is in a good place to kind of take advantage of that. So my sense would be that yes, he should look at these prices to average out, and as long as time is not a constraint, he should be able to recover not only his loss but also make money on this.
Okay, this one is coming in from Hemant, and Hemant is writing from Vizag. Kunal wants a technical view on Indian hotels as well as trend, holding Indian hotels from the levels of 250, trend from 1150 rupees per share. Any medium and short-term targets for exiting the counter, and if it's an exit and he should re-enter, then at what level should he look to re-enter them?
See, I think frankly you should look to hold on to both of these stocks, at least as of now. Indian Hotels has been looking very strong. The stock has managed to come back from 300 to I think 330 approximately was the recent high for the stock. It's retraced back marginally over the last 2 days. But then I think the stock should probably retest about the 330 levels. If you're looking at an immediate target point, then maybe 330, 340 could be a good target range for Indian Hotels. But since you've bought at lower levels, my advice is that if you have a medium-term time frame, you should definitely look to hold on. So it all depends on how much profit profit you are okay and comfortably holding with in terms of time frame. For the other name Trent as well, I think I would probably expect the stock to get into a breakout mode. It's just one confirmation point away in terms of the weekly monthly charts. 1385 is the breakout point for Trent. The stock tried to break out, I think last month about this 1380 levels, failed to do it. This is the second month where the stock is trying to preempt a breakout. So on confirmations about 1380, I think there's a high possibility that even Trent can come back towards 1500. So I would suggest the hold as of now for Trent.
Okay, moving on, and Ashish, coming to you, Srinath is looking to invest into Electra Green Tech, a stock which is already up 50% in the past 1 month. What's your long-term view on this particular counter?
The long-term view is certainly positive. Yes, the stock has moved up very fast lately, so maybe you could use, be a little patient and use some declines to buy. But the future is certainly very good because I think the EV theme is yet to play out fully, and I think the company is likely to do very well going forward. So there's no doubt about that. And I think the stock will continue to do well. Just that its run-up has been very strong, so maybe one can, wait for some cooling off before buying.
Right. On that note, let's slip into a break on this edition of Buy Now Sell Now. When we return, we'll continue taking your queries, so viewers don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of your stock-related queries. Next one is coming from Mr. Chirela Kunal. And wants to know about Sun TV. He's holding about 50 shares at a price of 445 rupees per share. He wants to add some more of these, some more of Sun TV to his portfolio for the longer term. At what price?
So Sun TV apparently is a stock which has been very, very sideways. I think looking at the charts for Sun TV, it just gives an indication that the stock has been trading in an absolutely low kind of a trading band. Rallies are being sold into, dips are being bought into, but then it doesn't result into any major kind of a trend for Sun TV. So it's very difficult, for me, frankly, to just about expect and anticipate that there would be any kind of a breakout for the stock price. Yes, you can just continue to hold on to the stock which you've bought at maybe lower levels for Sun TV, but I would not recommend to add or accumulate at further levels till the time there is a confirmation that the stock is finally ending this multi-year of consolidation and getting ready for a breakout. So just hold on to the existing stocks which you bought for Sun TV and not to accumulate further.
Okay, Kunal, once again coming to you. Karthik wants your advice on Dishman Carbogen. He's holding 500 shares at an average price of 240 rupees since past 2 years. He wants to know your short-term target to exit this counter and book minimum loss possible.
So I frankly believe that there is one pattern which is emerging in the markets right now, that most of these mid-cap pharma names or the tier 2 pharma names, they are now getting back into a recovery phase. So Dishman, Carbogen, from the likes of quality pharma stocks, Glenmark has done reasonably well. Zydus Life has also done reasonably well. So I think this is one sector which has started to look very attractive. I would suggest that hold on to your quantity for Dishman Carbogen. If possible, in case if the stock corrects towards the 200 DMA, which is at 107, 110 mark, that's a zone where you can look to add further and then reduce your cost price. My belief is that if this rally shapes up from the mid cap or tier 2 pharma stocks, then there is a possibility that even Dishman Carbogen can come back towards 160, 180 in the next 1 to 2 years. So that could be a much better attempt rather than selling off at current levels.
Okay, a couple of actually short-term queries. So let me take this one to you. Ashish, this one has come from Joy Manoj. And he has Info Edge at a level of 4,554 rupees per share. He has about 35 shares of Info Edge in his portfolio. He wants to know your view on this particular counter for the longer term. What should his strategy be with this counter? Because given the fact that's fallen way too much from his buy price.
Yeah, and this along with many other of the new technology ideas have fallen a lot because they were the flavor of the season that time, and now of course sentiment has turned. Having said that, I think there are a few of them which are still doing, I think, reasonably good business with very good, prospects going forward. And one of them is InfoEdge. So I think, given the fact that the business is very well established, very well diversified, and all of it showing very good potential. Though one can still argue that the valuation, despite the fall, is on the higher side. But given the fact that the new age technologies would eventually grow at a much faster rate, So I think at the current point, you should certainly hold on. No point booking a loss. And in fact, try and in a staggered way, try and buy a little more if he has the funds available to try and bring down his average cost of holding. I do believe that InfoEdge is one of the better technology ideas, and I think going forward at some point he would make money in it. But point is, I mean, difficult time it. So as long as there's no time constraint and he has some more funds available, you should try and average out at these prices in a staggered way. And I think eventually, in a period of time, he should get back his money and make some profit also.
Ashish, once again, coming to you, Arvind wants your advice on NMDC Steel. He's looking for fresh investment in this counter at current market price for long term.
Well, I think as far as steel is concerned, the immediate outlook remains very bleak. I think the prices are going to be in a very volatile phase going forward. Avoidable kind of sector, but if you really want to buy steel, I think why not buy the frontline ones? Buy Tata Steel or GSW Steel on the way down, rather than look at an NMDC Steel. I would prefer going with the larger, more established names, at least for the time being, as far as steel is concerned.
Kunal, your view on Ambuja Cements. Jai Krishnan has about some shares at a price of around 392 rupees per share for the medium term. Hold or look to exit?
Well, I would suggest to hold on. So the stock is corrected from 390. I think 410 or 9 was the recent high for Ambuja Cements, and from there the stock has come back towards 370 odd levels. But then the larger structure still seems to be positive for the stock. It's going into a recovery phase. Most of the Adani group of stocks have come back into recovery for themselves. Ambuja Cement and Adani Ports, I think if I'm not wrong, are the two names from the Adani pack which are relatively moderate beta. I'm not saying low beta or very high beta, but relatively moderate beta for themselves, and that could be a standout feature for these names given the kind of price action we've seen for the Adani group. So I would believe that it's a good time where you can look to hold on to the stock, at least as of now.
Okay, Ashish, Bishakha has invested into Data Pattern. She is holding 30 shares at a price of 743, sitting at good profits right now. But is this a good time to book profits in this counter or hold on for long term?
I would say hold on for long term. Yes, the stock has moved a lot, but the industry and the particular segment in which they are in is going to see a major boom in the coming times. And the company is one of the very few companies which are well established in this space. So I think going forward, this segment, like I said, has a great story going forward, and I think still the beginning stages. So data patterns would continue to do well going forward, and I would say hold on, don't be in a rush to book profit, stay invested. You will make much more money going forward.
Dikshita wants to know about NMDC. One, she wants to know whether it should be accumulated at current levels. However, she wants a view from both of our analysts. So quickly, Ashish, first your take on NMDC. How does this one look if you've already invested? Should stay put with this one in the longer term? Then Kunal, I'll come to you on whether at what levels can NMDC be accumulated.
Yeah, quickly, I think NMDC is a great value buy. I think should stay invested and in fact can buy more. As in, I think at some point of time this value would get unlocked and the investor would make a lot of money.
Kunal, your view on NMDC?
I'll completely concur with Ashish on this, that I think it's a good stock to buy, and if you're looking to hold on to it from the next 1 to 3 year perspective, then I think it's a good zone where you can look to buy NMDC.
So current levels is a good
Absolutely.
level? Okay,
Absolutely.
yeah. Okay.
Okay, but moving on, let's switch sector to pharma space now in Kunal. The next question is from Pradeep. He's holding 1,000 shares of Biocon at a price of 238. Wanted to know, can he exit at this level or wait for some more time and exit around 250 odd levels?
So, the recent price action for Biocon probably gave an indication that the stock is nearing a bottom, because the volumes with the stock had seen, I think if I'm not wrong, it was on 28th of Feb candle where the volumes were exceedingly high for Biocon, compared to the past many months for the stock price. So that gives an indication that possibly a near-term bottom is in place. I would suggest to maybe wait out for another couple of weeks in case if the stock makes a comeback and crosses that volume candle high of 230 approximately for Biocon. That could be a classical point where the stock would have confirmed a bottom formation. As of now, I would suggest to wait as well as hold.
All right, this one is coming from Satya. And Satya, before I take the query to Kunal, a keynote. You should not track a stock movement on a day-to-day basis. In case you've got a stock yesterday and today is declining, there's nothing to be perturbed about. You need to be patient as an investor in a stock market. So from there on, going to your query, Kunal, he's bought Bector Foods at a price of around 556 rupees per share. IEX at 145. This as per your advice after booking loss in Piramal Enterprises. He's saying that Bector Food is falling today. So what should he do?
Well, Bector Foods, we've recommended quite a few number of times, and the stock is already 15 to 20% higher from 460 levels where we started off tracking it first. Yes, the recent recommendation still holds on for Bector Foods, and I think, as you rightly said, Cheryl, that it's a stock which I believe holds potential for a breakout on a much longer term time scale. So if you're an intraday trader, then the focus is that you should stick with your stop loss. But if you're in from a medium to long term play, then I think you should continue to hold on both the names.
Okay, moving on, Ashish, coming to you for the next one. Kabir Bedi has bought 500 shares of Container Corporation at a price of 620 rupees a month ago, but currently he's at loss, but going ahead he can hold this counter for the next 6 months. So would you share your outlook on this one and what to do in this particular investment?
Well, I'm quite bullish on Concor. I think it's a good stock. Yes, markets also are a little choppy, so you could have a period of where you make a loss on it. But I think hopefully in 6 months, but if need be, you can stretch your holding a little bit more. Eventually, I think from here onwards, you should be making good money in Concor because company is doing well and logistics is really in focus, especially rail logistics. So I think the stock will do well eventually. Timing is, like I said, like I always said, is very difficult to be accurate on that. But yes, it's a very good zone in which to buy Concor, in fact.
Kunal, Nilima Heather has asked her view on Urja Global. I'm unsure if you track this particular counter, not sure what she's actually looking for this one. But on the charts, how does this one look like?
I think the penny stock, if I'm not wrong, trading at some 7-8 rupees. I think that's the last which I remember for the stock price. Volumes are also quite okay, but I think it's a penny stock. I think you should clearly avoid these kind of names.
Okay, Ashish Sudhakar bought shares of Timken India at a price of 3,600. Currently at a loss. Please suggest to average or sell.
Well, I think currently hold on and perhaps on the way down, you could average in a standard way.
Tarun has bought Gabriel India, Kunal, at current levels because the stock is trading below the 200 DMA. Should he wait for some more time so that it may be sub 120 levels? Oh, sorry. He's asking, can Gabriel India be bought because of the dip?
Well, you may look to, I would suggest keep it on your radar. Don't invest at least as of now because the stock seems to be going into a downward spiral as of now. The correction can accelerate for Gabriel India. Over the near term. So possibility of the stock coming back towards say 135, 140 mark is pretty much high looking at the last 2 days of chart pattern. So I would suggest to wait out, let the stock correct towards 135, 140 zone and then probably reassess.
Okay, so that's the view coming in on Gabriel India. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back.
You're watching Buy Now, Sell Now on ET Now, and at this point in time, we are at the day's lowest point. However, US markets or US futures are surging in trade, 2% uptick coming in for NASDAQ futures. But Kunal, given the fact the way how the markets are actually moving in the last 1 week, what a change in the sentiment altogether for the markets. In such a scenario, what should retail investors do? How should they make sure they're making the right move in order to protect their wealth?
Well, Cheryl, it's a pertinent question and I think it makes sense to follow the RRR method over here. The first one from the R is remain focused on more strong stocks because I think that's the only most important feature for markets in every kind of a scenario. We've seen that the stronger stocks have managed to absorb the volatility, the market shocks much more stronger as compared to the weaker names or the ones which we typically call them as high beta stocks. The second, the most important part is to reduce leverage. And I think this is the most important portion for traders because when the market gets into a strong optimistic zone, that's where we advise that you start taking higher leverage on stocks as well as on your portfolios. But when the markets become very tough, the conditions become very, very difficult. That's the time where you have to reduce your leverage. And the third R stands out for restrict high active trading to recover losses, because there is always a propensity for traders that if they are making losses, they would trade extra, they would trade more to try and recuperate of the previous losses. But then it's a downward spiral and it results into an incremental amount of losses. So I think if you follow these three methods, it's a good enough measure of having safety in these kind of tough market conditions.
Right, looks like you've been following the Oscars since the word go this morning. Kunal, the fact that you're also advising in that RRR mode for all of our viewers, and also you've watched the movie, haven't you?
Absolutely, and of course the dance.
And also the dance, yes. So right now, hopefully we get a moment where we all can perform that dance. Given the way how the markets are performing, I don't think so a lot of us are getting that moment. But let's continue taking your queries, Srishti.
Well, yes, absolutely. Let's move on. The next question that I have, Kunal, that's on options segment. So, Denny is holding TCS call option at a price of 3,385 rupees strike, and he entered this call option at a price of 58 rupees. He's holding 2 lots for the March expiry. What's your advice, hold or exit?
So, ideally, I think you should have exited the options, I think yesterday or day before, when the stock had broken below the 3,330 or 50 levels of support. But I think even as of now, I would suggest that keep a strict stop loss on cash basis at 30-90 mark. Stock is at 33.05, which means a drop of another 15-16 points could result into a breakdown of sorts for TCS on the very near-term charts. So keep a stop loss of 30-90 on spot levels on the option trade.
Okay, Venkatesan wants to know whether it's a good time to buy Mahindra right now. Ashish, what's your take on this one? Stands out when it comes to the auto pack?
Well, it doesn't really stand out, but yes, I think auto generally has not been doing very well. So it would be one of the sectors which I would look at. I think on the whole, I would think that the stock which looks quite good to me and could be the dark horse is Tata Motors. I think the kind of volume which they are picking up and the kind of things which they are doing, Tata Motors could be the dark horse in the long run. But having said that, I think all of them, Maruti, M&M, Tata Motors, all would be good ideas to pick up on the way down. Like I said, the sector has done nothing for quite some time now. So relatively underowned and in terms of volume and in terms of business, it is still doing quite well. So it is definitely a strong sector which one should look out for, and I think the possibility could be one of the leaders in the next bull run whenever it starts. So positive on M&M, but like I said, not my best pick in the auto space.
Okay, so the best pick is coming in at Tata Motors from the auto space, but let's move on and kickstart the rapid fire session. Kunal, the first question that I have is coming from Deepak. He's holding 5,000 shares of Leica Lab at a price of 114. What's the short-term target you're looking at?
I would suggest keep a stop loss of 106 and for a near-term target of 118.
Kunal, Abhishek wants to know best level to accumulate HUL.
Well, current levels are good levels to accumulate HUL. I think it's come back towards a major support of 2,450. So I think it's a good zone to buy.
Ashish, Girish Iyer is holding 11,500 shares of IDFC First Bank at a price of 58 rupees 50 paisa. What to do?
Hold on for the long run.
Okay, Soumitra wants to add position in SGS Sirma as well as Dixon. Can make sense to move money from AMC and insurance stocks to these companies, Kunal?
Well, I don't track these stocks, so I wouldn't be able to comment.
Okay, Ashish, Subramaniam wants to know the medium-term outlook on GAIL. He bought 500 shares at an average price of 93 rupees. Hold or exit?
Hold.
Okay, Akash has ICICI Prudential at a level of 478 rupees per share. Best course of action that he should now adopt, Kunal, given the fact the stock has seen a huge fall. 6 to 8 months is the time horizon.
Well, I would suggest to hold on as of now, but if the stock breaks below the 375 support, it's a good time where you should look to exit.
Okay, Ashish, Amit bought shares of IndusInd Bank, 100 shares he bought at a price of 1,230 rupees. Should he average IndusInd Bank today?
Yeah, he can look at everything.
Okay, Chandan has NCC 88 rupees per share. What should he do? Continue to hold on to it or look to exit? Period of 2 years, Kunal?
I think you should look to hold on.
Okay, Kunal, Sukanya has bought 100 shares of NTPC at a price of 170 rupees. Hold or sell, and what is the short-term target?
Hold, and possibly I think near-term targets, not short-term but near-term, could be closer to 200 for NTPC.
Kunal, what's your view on Page Industries? Do you think that it's a good time to enter? If yes, then at what price?
Well, two successive quarters of sharp correction for Page Industries, but the stock has not formed a major bottom. So I would suggest to wait out for some more time, let the stock get into a rally, break above 40,000 mark. That could be a point where you may look to enter.
Okay, but with this, viewers, it's time to end the rapid fire session and wrap this edition of Buy Now Sell Now. Kunal and Ashish, thank you so much for joining us today on ET Now and helping all our viewers with their stock related queries. But with this, it's a goodbye from me and Cheryl and the entire team who put this show together. Thank you so much for watching.